XRP is trading at $1.11 right now, and if history rhymes even half as well as it usually does, that price could look embarrassing by the end of 2027. I know that sounds like hype. I know every XRP bull has been saying something like that for years. But here's what's different this time. And I mean actually different, not just hopium. The regulatory overhang that crushed XRP's price for years is gone. Institutional on-ramps are live, and we are sitting inside a Bitcoin-led macro cycle that historically lifts every major coin with real utility. XRP has $1.11 on the board right now. The question is whether you understand what that number actually represents, or whether you're just watching a ticker. Let's get into the fundamentals first, because this is where most XRP conversations go wrong. People either oversell it as a bank coin that's going to replace the entire global financial system by Tuesday, or they dismiss it as a centralized corporate token with no soul. Both takes miss the point. XRP's actual job is one of the most boring and most valuable things in finance, moving money across borders quickly and cheaply. Right now, when a bank in, say, Mexico wants to settle a payment with a counterpart in Southeast Asia, that money can sit in transit for 2 to 3 days, trapped in correspondent banking chains, racking up fees. Ripple's on-demand liquidity product uses XRP as a bridge. You convert on one end, it settles in 3 to 5 seconds, and the recipient gets local currency on the other side. No pre-funded Nostro accounts. No 2-day float. That's the pitch. And unlike a lot of crypto pitches, this one is already generating real transaction volume on real corridors with real financial institutions. The network isn't theoretical. The settlement layer is live. And after years of being legally radioactive in the United States, XRP now has more regulatory clarity than almost any other major digital asset. That matters enormously for any bank or payment processor thinking about touching this. If this breakdown is helping you cut through the noise, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Hit the bell so you don't miss the next one. Now let's talk price. The realistic bull case for XRP between now and the end of 2027 is not $10 because someone on Twitter drew a line on a chart. It's $10 because of what happens when institutional capital starts flowing into an asset that previously couldn't be touched due to legal risk, inside a broader market cycle that's already compressing altcoin dominance into a few quality names. Here's how the math works. XRP's all-time high is around $3.84, hit back in January 2018. In the last cycle, it ran to approximately $1.96 before cooling. Each successive cycle tends to set a higher floor. Right now, that floor looks like it's building somewhere in the $1 to $1.20 range, which is exactly where we are today. The next leg, if it follows even a conservative pattern relative to Bitcoin's cycle peak, puts XRP somewhere between $4 and $7 as a base case. The $10 target requires the institutional adoption thesis to materially accelerate. Specifically, major banks in the US and Europe publicly integrating ODL corridors at scale, and ETF or custody products normalizing XRP exposure for traditional portfolios. That's a higher bar, but it is not a fantasy bar. Standard Chartered has published targets in that range. And when a bank with a balance sheet that size puts a number on paper, retail traders should at minimum understand why. Whales have been quietly accumulating in the $1 to $30 range for months. On-chain data shows wallet cohorts holding 1 million XRP or more have been growing steadily. That's not retail. That's patient, large-scale positioning. Now for the part that most XRP channels skip because it kills the vibe, the bear case. And this one is real, so listen up. First risk. Ripple the company and XRP the asset are more intertwined than the project admits. If Ripple's business model hits headwinds, slower than expected bank adoption, a competitor winning the payment corridor race, or new regulatory friction in international markets, XRP's price narrative weakens fast. The token's value is partially a bet on Ripple executing, and execution is never guaranteed. Second risk, supply. Ripple holds a massive portion of the total XRP supply in escrow and releases a portion each month. That is a structural sell pressure that doesn't exist for Bitcoin or Ethereum in the same way. When price rises sharply, those unlocks become a real